Attention all households across the United Kingdom, because a massive wave of new financial support measures is officially rolling out this April 2026. And if you are looking for the next £300 to £500 cost of living payment, you need to understand that the rules of the game have completely changed. We are entering a new era where the government has pivoted away from the one-off cash drops of previous years in favor of permanent benefit increases and a brand new emergency fund that could put hundreds of pounds back into your pocket if you know how to apply. If you are waiting for a £300 deposit to hit your account automatically like it did in years past, you are going to be disappointed, because that specific scheme has been retired and replaced by a much more complex system of targeted relief. From the total removal of the two-child benefit cap to the launch of the 3-year Crisis and Resilience Fund, the landscape of British welfare has been rewritten overnight, and failing to understand these updates could mean you miss out on a total package of support worth over £500 this month alone. The primary reason you are seeing headlines about a £300 to £500 cost of living payment for April 2026 is a combination of two major factors, which are the energy price cap drop and the expansion of the warm home discount. For the first time in years, the energy regulator Ofgem has confirmed a significant reduction in the price cap, which is set to save the average household approximately £117 over the course of the next 12 months. When you combine this automatic saving with the one-off £150 warm home discount that is being paid out to qualifying low-income households and pensioners, the total saving reaches that £300 mark. This is not a direct cash deposit into your bank account, but rather a massive reduction in your outgoing bills, which provides the same level of financial elasticity as the old cost of living payments. You must ensure your energy supplier has your correct details, because these savings are applied automatically to your bill from April 1st, 2026, and you do not need to lift a finger to claim them. +2. However, if you are in a situation where you need actual cash in your hand to cover a sudden financial shock, you must look toward the brand new Crisis and Resilience Fund, which has officially replaced the Household Support Fund as of April 1st, 2026. This is a historic 3-year settlement worth £1 billion per year from the Department for Work and Pensions that gives local councils the power to award emergency grants to residents in immediate distress. Unlike the previous short-term extensions, this new fund is designed to build long-term financial security, and you could be eligible for a one-off payment of between £300 and £500, depending on your local council's specific criteria. These grants are intended to cover essential living costs like food, energy, or even emergency household repairs that you cannot afford due to a sudden drop in income. To access this money, you must apply directly through your local authority website and provide proof of your financial situation, including bank statements and your national insurance number. This is the most direct way to get a lump sum of support in 2026, and the government has committed billions to ensure that councils can prioritize those with the greatest need, with a strict 48-hour turnaround time for emergency applications. +2. The most explosive update for families this April is the official removal of the two-child limit on universal credit, which has been a major point of contention for years. From April 2026, the government has confirmed that families will now receive the child element for every single child in their household, regardless of whether they were born after 2017. This is an incredible boost for larger families, as it can add hundreds of extra pounds per month for each additional child to your universal credit claim. For a family with 3 children who was previously capped at 2, this represents an immediate and permanent income increase that could be worth over £3,000 per year. This is a massive shift in social policy aimed at lifting hundreds of thousands of children out of poverty, and it means that for many families, the cost of living support this year is not a one-off payment, but a permanent monthly pay rise that far exceeds the old £500 cash drops. You must log into your Universal Credit Journal and ensure all your children are listed on your claim to trigger these new payments automatically. +3. At the same time, we are seeing a significant uplift in all standard benefit rates as the government implements the largest percentage increases in a generation. The state pension has officially risen by 4.8% under the triple lock, which brings the full new rate to £241 and 30 pence per week. This means that over the course of the next year, a single pensioner will see an extra £575 in their bank account compared to last year. For those on universal credit, the standard allowance for a single person over 25 has jumped to £424 and 90 pence, while couples over 25 now receive £666 and 97 pence. These 6.2% increases are designed to ensure that your purchasing power stays ahead of inflation, and for most households, the combined total of these monthly increases will exceed £500 by the end of the summer. This is the government's new strategy for 2026, which is to build support into the base rate of benefits rather than relying on the sticking plaster of one-off payments. But there is a catch that you need to be aware of, because the health-related elements of universal credit are undergoing a brutal restructuring for new claimants. If you are making a fresh claim for limited capability for work and work-related activity from April 6, 2026, you will receive a significantly lower rate of support than those already in the system. This is a deliberate attempt to reduce the welfare bill and encourage more people back into the workforce, and it means that, for some new claimants, the total support package is actually shrinking, despite the headline increases. If you are an existing claimant, your rate is currently protected, but any break in your claim could move you onto these new lower rates, which would be a financial disaster. You must be extremely careful to fulfill all your work search requirements and keep your fit notes up to date to ensure your current level of support is not compromised during this transition. For workers, the news is more positive, as the national living wage has officially increased to £12 and 71 pence per hour as of April 1, 2026. This represents a 4.1% rise and means that a full-time worker on the minimum rate will see their annual take-home pay grow by hundreds of pounds. For younger workers aged 18 to 20, the increase is even more dramatic at 8.5%, which brings their hourly rate to £10 and 85 pence. These changes, combined with the removal of the lower earnings threshold for statutory sick pay, mean that more people are protected from the first day of illness and are earning more for every hour they work. The government is essentially shifting the burden of cost of living support from the taxpayer to the employer by mandating these higher wages while providing targeted relief through the Crisis and Resilience Fund for those who still cannot make ends meet. Push 4. The Department for Work and Pensions is also continuing the managed migration of legacy benefits, and if you receive a migration notice this month, you must act within the 3-month window or risk losing everything. By moving everyone onto universal credit, the government aims to create a more efficient and transparent system, but for those who fail to engage, the consequences are absolute. If you are on housing benefit or employment and support allowance, look out for a letter in the post, because your current support is scheduled to end by the end of 2026. The good news is that if you migrate before your deadline, you will receive transitional protection, which ensures your total income does not drop even if the universal credit rates are lower for your specific circumstances. This protection is a vital part of the £500 support strategy, as it prevents a sudden cliff edge in your household budget. The message for April 2026 is clear. The era of the automatic £500 cost of living payment is over, but the total volume of support available is actually higher if you know where to find it. You need to combine the energy saving with the warm home discount and the 6.2% benefit uplift to see the true picture of the government's plan. If you are still struggling, you must be proactive and apply for the Crisis and Resilience Fund through your local council rather than waiting for the DWP to send you a check. The system is moving toward a more targeted and digital-first approach, where those who keep their accounts updated and engage with the new funds will come out ahead. Take control of your finances today. Check your new benefit rates, and make sure you are not leaving any money on the table, because in 2026, the government is providing the tools for survival, but it is up to you to pick them up and use them. Stay alert to the changes in your council's website and keep your online journal active, because this April is a turning point for the UK welfare state, and only the most informed households will thrive. The financial landscape of 2026 is also being shaped by the ongoing digital migration of all government services. Whether you are claiming attendance allowance, which is seeing a 3.8% rise, or personal independence payment, you must ensure that your banking information is current in the government gateway. The authorities have implemented a new automated auditing process that flags accounts with outdated contact details, which can lead to payment delays during this critical April transition. If you have moved home or changed your mobile number in the last 6 months, you must report it now to avoid being caught in the next round of verification checks. This is part of a larger plan to ensure that every pound of the £11 billion uprating expenditure reaches the correct bank accounts without falling victim to the sophisticated fraud schemes that have targeted the benefit system in recent years. Furthermore, the government is doubling down on its commitment to the triple lock for pensioners, ensuring that 12 million people see their income grow by at least £575 this year alone. This £6 billion boost for pensioners is a cornerstone of the 2026 budget, and it comes with additional perks like the continued cold weather payments and the newly reformed pension credit system. By raising the standard minimum guarantee and pension credit to £238 a week for single pensioners, the government is unlocking a gateway to even more support, including free television licenses and assistance with council tax. If you are a retiree who has never claimed pension credit before, this April is the time to check your eligibility because it could be worth an average of £4,300 a year in extra benefits that you are currently missing out on. Plus 2. As we navigate the rest of this financial year, you should also be mindful of the changes to prescription charges and dental costs, which have been frozen in many parts of the country as part of the cost of living relief package. This freeze, combined with the higher wages and benefit rates, represents a multi-layered approach to economic stability. The transition may feel overwhelming with the sheer number of updates, but the end goal is a more resilient household budget for every citizen. The Department for Work and Pensions has launched a dedicated helpline for those struggling with the new digital portals, and councils are being encouraged to hire more frontline advisors to help people navigate the Crisis and Resilience Fund applications. No one should have to choose between heating and eating in 2026, and the government is placing the financial power back into your hands through these targeted and robust reforms. Finally, make sure you are reading every piece of correspondence from the DWP or HMRC carefully, because the deadlines for the child benefit reforms and the managed migration are strictly enforced. The removal of the two-child cap is a massive win for social justice, but it requires your active participation to ensure your family's records are updated in the system. The same applies to the national living wage increases, which should be reflected in your very first payslip after April 1st. If your employer fails to implement the new £12.71 rate, you have a legal right to report them to the authorities for enforcement. We are all part of this economic reset, and by staying informed and asserting your rights, you can maximize the £500 support package that the government has designed for this historic year. Stay safe, stay proactive, and keep your eyes on the official announcements as the 2026 financial year continues to unfold. Your financial security is a priority, and these changes are the first step toward a more stable future for all.